Bitcoin holders do not know what's about to happen next inside of Bitcoin. And we're about to talk about what's going to happen next because this is kind of big. Could be bad for some people, could be good for others. But we'll talk about this. Remember, I'm not a financial advisor, none of this financial advice. Well, let's get straight to it. So, let's talk about Bitcoin. First of all, we have 52.2K inside of Bitcoin right now. That's pretty good. That's a good price. And it's at the all time high for the year for the last 365 days. Bitcoin is at its all time high for the last 365 days. That's really, really big. And it's actually an important number. We'll talk about why later. But, anyways, 7 days ago, 5.3% up in the last 7 days. 14 days ago, 21.6% in the last 14 days. 30 days ago, 26.1% in the last 30 days. 365 days ago, 111% up. So big numbers right now inside of Bitcoin. It's doing really, really well inside of every single time period. So, hey, we can't complain right now. Bitcoin's just been on a straight stair step all the way upwards. But we're going to talk about why, this could be a little bit of a bad thing. Obviously, we can break out and then, continue to rise from there. But what we really want to watch out for is when we finally do have our pullback, is it going to be too hard for some people to fathom, right? Is it going to be such a hard pullback to where people are just over leveraged inside of Bitcoin? And that's kind of the thing right now because there's a lot of people inside of Bitcoin that are over leveraging themselves. And that's kind of what this video is going to be about today. So stick around to the end of the video. Now, next thing that we're going to be talking about right now is the resistance. We're getting rejected right now at that resistance that we were talking about. We're talking about the resistance all the way up here at 52K Bitcoin, and we got rejected for a brief second there right as we hit 53K. It wasn't really able to go anywhere past that. So that's pretty interesting to see. And I made this resistance line like a while ago, and actually if you look at that, we just kind of completely passed this Fibonacci retracement right here, going all the way from 42.3K all the way up here to 48.3K. We just kind of completely passed it, did not sit inside of there, not for one bit, not even for a day. Well, yeah, actually for a day, but for more days. But still, we were inside of this little time period for like the shortest amount of time, right? So this is kind of interesting because we just been kind of straight up here with Bitcoin. And usually when that happens, we typically get harder pullbacks whenever we just have these hard, rises upwards. So you can see as it goes up a lot, the pullback kind of starts to look a little bit big, but this pullback that we had first was not that big. It pulled back all the way from the Fibonacci all the way up here from like 48.6K all the way down here to about 39.4K. So it was about a 10K pullback right there. So that was, that was pretty bad, but it wasn't that bad. It didn't bring us all the way down to 28K or something like that, right? So give or take, we know that whenever we have these big pullbacks after we have the huge pump, we typically go down by about 10K. So that's what we want to watch out for. Because if we were to pull back now from 52K, you could probably bet that we're going to pull back to like 42K to this Fibonacci retracement, right? And right now on the RSI, this is the daily chart, the 1 day chart. And actually you can see the RSI is going downwards, but the RSI could easily cross like right here, right before it continues to go down and then go right back up like it did before. So what it would look like is crossing right here and then going right back up. So if that happens, we would obviously go up to our next Fibonacci retracement, which would be 56.5K. And we would break the momentum wave bands here for our chart prime indicators. Link in the description for chart prime, by the way. But yeah, we would break those indicators there. So that would be pretty interesting. But let's say we were able to get past 52K, right? Let's say we broke 52K and we were able to actually get past 56K as well. Well, then from there, we got the next Fibonacci, which then brings us closer to getting to 72K. Now, right now, what I'm actually looking for here, let's say that we do pass the 52K, right? What I'm actually looking for here with the price of Bitcoin is for us to go more so around 62K. I'm not really saying we're just going to automatically go up to 70K. Like it doesn't happen like that. It never happens like that. But if you do look back here, I'm looking at major resistance that we had previously. And, that's pretty much at our all-time high. That's how we do our little Fibonacci's here. But if we look at that, that's bringing us closer to 70K. Let's say we were to look back at a different resistance, maybe our 52K resistance. Let's say that we wanted to stop there with it. Well, then we would probably go down by 10K if we go all the way up to 62K. And the thing with that is going down by 10K isn't that bad if we go up to 52 or if we go up to 62K, because that brings us back down to where we are now, 52K. And that's kind of how it's looking right now, because if you look at it, that's exactly what happened previously. but you don't want to always, compare to what happened before and think that that's going to be what happens now, because, you can definitely get burned like that in the crypto market. So it's not really good to do that a lot of the time, but, it's something that you could look at. It's a different way to look at it. Now you also have to look at different time periods. Look at the 4 hour chart. So when you're looking at the 4 hour chart here, you can see on the RSI is actually still increasing, which means we still have a little bit of a ways to go upwards before, we have that pullback. So right now it is about right here. There's always a possibility that it pulls back down, kind of like here, but it could be just a small pullback, like right here, how it went from. Let me actually zoom in so you can see that a little better. But yeah, right here, how this went all the way up here from 50.4k. It went from 50.4k down here to the Fibonacci at 48.7k. So it went down a little bit, right? It didn't go down a lot. And that's kind of what it's looking like right down here. It could go down slightly a little bit right now. And if it did that, it would go up to this next line here, which is the Fibonacci at 48.6k. And this little green line here, this is part of the chart prime indicators. Same with this line here, same with this line here. It kind of just sets out these different support areas for us, right? So if we were to pull back, we would go down to that next little green line. It just so happens that the next little green line is at our Fibonacci retracement, which is why I like the chart prime indicators. Link in the description for that as well. Because when you couple that with your Fibonacci's and you make your own support levels by looking at previous levels, then that definitely helps you confirm what you're looking at is actually correct. So what I like to look at here, especially like with the support levels here, if we pull back, like I said, we usually pull back by like 10k. We could go from 52k to 48k, or if we just randomly pump all the way up to like 60k or 62k, then we can go down by 10k from there. But also what you want to look at is the next Fibonacci retracement. So this one right here with the top of the momentum wave band, just so happens the momentum wave band for chart prime brings us up to our resistance for our Fibonacci, which it kind of verifies that it's correct, which is why you always got to use different forms of verification when you're doing technical analysis. But when you're doing that, you see that we have the resistance up here that stops at about 56.5k. If you think about it, 10k below there would be 46k. And when you look at that, that's where the bottom of the momentum wave band is. That's the next support, for the 4 hour chart, if you look at it. So there is also support at 46k. So you can bet that if we pull back, we're probably going to have 48k and 46k as our supports if we are to break 52k and go up where it's towards like 56k or 62k. So just to kind of break that down, if we go to 56k or 62k, we could either pull back to a support of 48k or 46k. So that's a good level to look at it by. But yeah, this is just a little technical analysis for right now. Remember, I'm not a financial advisor, none of this is financial advice at all. But we're just kind of throwing out numbers out there, breaking this down. And no one can ever be 100% sure about what's going to happen in the market. Nobody can predict it, but we can analyze it, and then we could try to make a guess of where it's more likely to go. So that's the point of doing technical analysis. But you always want to do your fundamentals as well. You always want to do fundamental analysis as well as on-chain analysis. You want to know what's happening on the blockchain. So something else that's happening on the blockchain right now are the Bitcoin futures open interest just now hit a 26-month high. So this is pretty cool. It says Bitcoin price rejects at 53k as futures open interest hits a 2-year high. Pretty much what this means is new money is flowing into the market for Bitcoin. And if new money is now flowing into the market, you can bet what that new money is doing in these future markets. They're probably opening long positions. That's why Bitcoin is continuing to go up, 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 and up, because the new money that's flowing into Bitcoin is now opening long positions. And you can see the proof here. You got the people doing Binance, BitMEX, Bybit, CME, OKX, Deribit, Kraken, Bitfinex, Huobi, BitGet, DYDX, CoinX, Coinbase. All these people, all these exchanges, people are doing futures on all these and they're opening long positions. So the reason why I said this could be bad for some people and good for some people is because right now, all the people who have long positions, they're making money right now. They're making money, right? And that's good for them. But who this is going to be bad for are the people that are still in the long positions when we have those pullbacks, because it might go lower than 52k. And that is because What do the whales do? What does big money do when they see everybody is opening up long positions? When they see everybody opening up long positions, they start to open up their short positions. And this is probably what's going to happen. You're probably going to see whales and big money people inside of Bitcoin and crypto markets start to open up short positions to go against your long positions because they know they have more money than you. And then their money is going to be worth more. So then the short positions are going to drive the price down and they're going to liquidate you guys and you're going to lose a lot of money. Right now, you're making money inside your long positions, but the second it reverses to short positions, they are going to overload the market with shorts and it's going to look bad. But, anyways, let's keep reading this. So, Bitcoin futures open interest has hit a new yearly high, reaching levels last seen in November. They have so many different typos here. So it says number 2021. So last seen, you mean in November 2021. They kind of have something similar over here. Well, CoinDesk does. CoinDesk called him Michael Taylor when his name is actually Michael Saylor. I think they need to hire me as a proofreader. Both of them, both Cointelegraph and CoinDesk, probably owned by the same people. But yeah, y'all definitely need to hire me as a proofreader over here. But anyways, let's read it. So, reaching levels last seen in November 2021, this indicates increased trading activity around the largest cryptocurrency by market capitalization. Data from cryptocurrency futures trading and information platform CoinGlass shows that the total OI for Bitcoin futures in OI open interest reached $22.69 billion on February 20th. February 20th should have TH there. The highest since November 11th, 2021, closely approaching the peak of $23 billion recorded then. So more money is flowing in just as much as when we were in November 11th, 2021. And you got to remember, during that time, that's when COVID was going crazy. That's when everything was peaking out. That's when the money in the markets were going crazy because, we had stimulus checks. Uncle Joe was throwing out them stimmies. Everybody was getting stimulated. Everybody had that stimmy money. They started putting it inside of Bitcoin. They started putting it inside of all these different things. Money was flowing everywhere, right? Money was just being printed. And now we're kind of at that same area where we're not even printing money at this point. Well, we are just small, way, way, way smaller amounts. But the printing money is not going all into Bitcoin. Yet Bitcoin's open interest for its futures is just as high as it was back in November 11th of 2021. So that's kind of big. That shows you that everybody is going hard on these long positions and they're doing good right now. But what they don't know that's about to happen is going to be the reversal to the downside once the big money whales bring in those shorts. So they're already waiting to bring in the shorts. See, what I like to do, a lot of people say you always want to trade with the market, which is true. While it's going up, you want to trade with the market. But when it goes up to such a point where it just looks ridiculous, that's when you want to start trading against the market because it can't go up forever. Like what goes up must come down. So what I personally like to do, I like to watch as the price goes up. And then when I see huge rises like this, but it doesn't pull back hard, I know there's going to be a few more pumps before there's a huge dump. So me personally, I believe we can go from 52K to 56K or from 52K to 58K, or from 52K to 62K, and then eventually we can crash. So, my strategy here, if I were to trade shorts right now, I'm not doing it right now, but if I were to do it, what I would be looking for are those levels. I would wait until Bitcoin continues to go up. I wouldn't open long positions now. You should have opened long positions, honestly, back in January. Like you should have did it when Bitcoin was still 38K. So that's why I would not open long positions. You should have been did that. But you're kind of a little bit too late. You're not too late, but you don't want to push it, right? You don't want to push it all the way to the limit. You want to have that leeway. So me personally, I wouldn't do longs. I would wait till it gets to about 56 to 58K. If I see it gets to 56K and it starts to pull back heavy, then all right, I missed my opportunity. I'm not even going to open shorts. If I see it gets to 58K, pullbacks a little bit, I'm like, okay, this is a little bit doable. Maybe I'll put a little bit in. I'll see what happens. It pulls back down to 57K. Cool. I'll make my profits. I'll take my profits for my short from 58 to 57K and I'll let it keep going up. But when it gets up to like 62K, I'm like, okay, I'm going to open up all my shorts at this point because even if it goes up to 70K, I still won't get liquidated as long as I don't have heavy leverage. and then the price is eventually going to crash and it's going to get back down to the 50Ks, and I can still profit from 62K down to 52K, because remember, it typically goes back down by 10K. Could go down more than 10K, but I would stop that position at 52K, because 10K is all I'm looking to go for, right? So that's pretty much what I'm looking at right here for the futures. That's just a little future trading strategy. But yeah, I mean, hey, Bitcoin traders focus on the next leg up. So that's what they're focused on. They're focused on moving from 52K up to like 56K, 58K, eventually 62K. Those are our resistance levels: 56K, 58K, and then yeah, 62K. If it breaks 52K, almost immediately up to 56K. If it breaks 56K, immediately up to 58K. If it breaks 58K and goes up, it could get rejected at 58K, or it could immediately go up to 62 and then get rejected hard. That's what I just believe is going to happen. Like I said, I'm not a financial advisor. None of this is financial advice. But another thing that Bitcoin holders don't realize is the Bitcoin halving is right around the corner. Right as we go into the Bitcoin halving, we typically start to have a drop in Bitcoin. But like 6 months to a year after it, you start to see that rise. It starts to go up, 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 up. And what's going to happen here, what I think personally, leading up to this 56 days, we're probably going to have, some pumps coming right now in the next 10, 20 days, probably going to get to 62K, right? It's just what it is. That's what I think it is. Probably going to get to 62K or 58K or 56K within the next 10 to 20 days. But then from there, we're going to have that drop leading up to the Bitcoin halving. You know what this is? This is going to be the Bitcoin miners selling their Bitcoins at a good price right now. Because when they see it going up to 62K, remember what happens to the Bitcoin halving when these people, when it halves, right? It's going to drop. It is going to drop. So these Bitcoin miners are not going to make as much money when this happens. When that happens, they're not making as much money. So what's going to happen is they're going to sell while Bitcoin's high. Sell while the iron's hot, right? You want to sell when Bitcoin's still high. That's what they're going to do. That's what they're going to do, right? So what's going to end up happening is, they're going to end up having to sell it a little bit, and it's going to be what it is. It's just going to be what it is. Read what happened in 2020. The 2020 halving was the third halving, occurred on May 11th, 2020. New Bitcoin per block before was 12.5 Bitcoins per block. New Bitcoin block after was 6.25 Bitcoin per block. Price on halving day, 8,800. That was May 11th, 2020. So I'm just going to kind of go back. We're just going to go back here. May 11th, 2020. So where is that? That's all the way back here. May 11th, 2020. All right. So let's see what happened right before May 11th, 2020. Zoom all the way over here and then look at what happened after. So here we have May 11th of 2020. And here's May 11th. So right before May 11th of 2020, Bitcoin in February was 9.7K. But then Bitcoin went all the way down to 5.1K in March. And then it started to go back up when it was getting closer to the Bitcoin halving. And then when it did that, and it was finally May 11th, then it finally started to increase. So like I said before, I think we're going to, typically at the end of February, we typically get a drop inside of the prices for crypto. Like it's going to go up in February like it's doing now. It's going to peak like it's doing now, possibly get to 62K. I don't know if it will. And then it should go down into March, and then boom, 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 goes down, hits a bottom, and then it starts to go back up, leading up to our Bitcoin halving. So that's just what happened in the future, or I mean in the past. So it could happen in the future, but you don't always want to look at what happened in the past and say, hey, it's going to happen in the future too. So you don't always want to do that, because sometimes sometimes history doesn't repeat itself. But yeah, in the 2024 halving, the reward will drop from 6.25 Bitcoins per block to 3.125 Bitcoins per block. So it would make sense for them to sell their Bitcoin while it's still high, because they're going to be making way less Bitcoin inside of the next halving. So it just makes sense, right? Anyways, let's talk about Michael Saylor, as they like to call him, Michael Taylor, because they got a little error here. But anyways, Michael Saylor, not interested in selling Bitcoin is the exit strategy. Now, I'm not going to read this whole article. There's just one important thing I want to talk about this, because Obviously, he's not going to sell. He's got his whole thing going on with MicroStrategy. But MicroStrategy first started purchasing Bitcoin in August 2020 and has since August 2020 and has since consistently added it to its portfolio. It's kind of important to look at this because August 2020, what was happening inside of MicroStrategy? It was doing nothing until August. MicroStrategy was literally doing nothing until August. You can see it right here. Nothing was going on inside of this stock until August. August hits, August 2020, and then boom, they buy Bitcoin. They bought Bitcoin. It just so happens that their stock hit all-time highs, the highest it's ever been. And it so happened that Bitcoin goes down and their stock goes down, right? They keep buying Bitcoin. And it just so happens that as Bitcoin's rising again, their stock's going right back up. So this is pretty important because if that's what we're looking at and that's what we're following, like we got to think about what's about to happen here. Like if that's what their stock is following, Bitcoin is pretty much leading, the stock market. When money flows out of the stock market, it flows into Bitcoin. People are talking about a stock market crash. So we can get a lot of money now flowing into Bitcoin from the stock market. So a lot of money is about to, pump Bitcoin up. Maybe we'll go to 62K. But remember what happens once that money pumps and they get their cash. They always end up selling once they get their cash, right? So they're going to get their cash. That's where the shorts come in play. All of this is now coming to full circle now. That is when the shorts will come to play. So, like I'm saying, I truly believe the whales are going to do these shorts once it peaks. It happens all the time. Like when a price peaks, it doesn't stay high. It never stays high. It peaks and then it drops humongously. So I'm waiting for that drop. And when that drop happens, I will be riding those shorts downwards. Like I said, we can either stop at 56K or, well, no, 56K is here. We can either stop at 56K, 58K, or 62K. That's what I'm looking for now. So boom, 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 or boom. That's what we're going to do. And that's what I'm watching out for. And hey, maybe it goes above 62K, but who knows? But yep, this is pretty much all I got for you all today. This was a whole action-packed video. We had a lot talked about today. Let me know what you guys think about this. Let me know your personal opinions. Do you think I'm right? Do you think I'm wrong? And remember, I'm not a financial advisor. None of this is financial advice. Definitely check out the link in the description if you want to sign up for Chart Prime, best trading indicators in the game. And yep, as always, I'll be back with another video.